Today, I want to welcome Erik Brenner. He is the president and CEO of Hilltop Wealth and Tax Solutions. It's a fiduciary firm that integrates advanced tax planning, advanced financial planning with in-house tax strategy. And he is also the author of The Personal CFO Revolution. He has over 30 years of experience helping high net worth individuals. That includes pre-retirees, business owners, and medical professionals. He helps them transition from saving and building to preserving and distributing wealth and confidence. Erik, welcome.
Hey, Craig. Thanks for having me. Look forward to being here.
Yeah, so this episode's going to be going live in the spring, but the while we're recording it, you guys have a problem with iguanas falling out of the sky.
Yeah, yeah. I'm actually in Florida as we're recording it, and because of the cold snap that has happened, we've had iguana fallings, not just sightings, and they actually have warming centers that you can take the iguanas to help them get through this cold snap.
Wow. Yeah, that's gotta be wild.
It
That's
is
gotta be
wild.
yeah. So you said something in the green room that really caught my attention because it was a little bit reminiscent for me. You filed your first tax return at how old?
12.
12.
Yeah.
That's pretty wild. What was it like? Why?
Yeah, so I grew up in my parents, my dad was an entrepreneur, and so I was very intrigued by that at an early age, and I went to work with him, and he put me to work. So it wasn't just tag along and eat candy and bug people. So I went to work, and I said, if you're going to put me to work, you got to pay me. So I had enough in income back in the day that I filed a return, probably not legal, I guess, as far as the age goes. And so what it did is it taught me good work ethic, taught me a lot. Certainly my biggest mentor is my dad, and just how to get really a good start in life and in business.
Yeah. Did you have to do the paperwork yourself? Did you actually have to do your own return?
I think what happened, if I recall, because it's just been a few years on that, Craig, but I think my at the time my dad's CPA accountant kind of took care of it, along with their stuff, if I recall. So, and I continued to do that. I mean, I bought my first car cash before I even had a driver's license.
Oh,
I had to have someone drive it home. So but those were fun times. They certainly were fun times, and I always liked showing some reward, which included an income off of the work I did.
yeah. I I wasn't 12. I think I was maybe 14, 13 or 14. My dad sat me down at the dinner table and showed me how to file my first return. And yeah, I think he had a CPA doing his returns, and his CPA would send him a nice box of chocolates every Christmas. And I remember one time he was showing off his box of chocolates to me. And he was offering me one, of course. And I said, "Well, you know what that means?" He said, "What?" I said, "You're paying your CPA too much." And
Yeah.
but so interesting, and um, it's interesting. I talked to a lot of wealth managers, and a lot, not many would be that call themselves tax advisors. They always, many of them have tax strategies, but you're actually I'm trying to remember from my notes. Are you a CPA
No,
or
I'm not a
CFP?
CPA.
You're
Yeah,
a
I'm a
CFP.
CFP. Yeah,
Yep.
I'm a CFP. But we just several years ago really saw the need and kind of directionally that clients wanted to have that, as part of the overall service, and advice deliverable. And things are just way more complex than they were even 10 years ago, 15 years ago. And so, we went down a path and working with other CPAs and so forth with their CPAs. And it was just never really a real collective type team. And oftentimes I found that they had a hard time looking out into the future. It was kind of this year only. And so we, several years ago established our own tax team, our own tax business. So we've integrated that tax business. I have a partner on the tax side that runs that business, and we integrate it within the work that we do. And not only do, tax preparation is one thing, but we do true tax planning, giving people actual projections, and then also talking about strategy and reduction of tax.
Yeah. One of my frustrations in my journey has been I had to learn about all my tax strategies from someone other than my CPA. And something as simple as like the Augusta rule. I had to, somebody told me about the Augusta rule, and I had to call my CPA and say, "Hey, I heard about this thing called the Augusta rule. Can I use it?" And he's like, "Oh, yeah, sure." And I'm sitting there thinking, why is it that I'm the one telling you about this?
Yeah, I mean, I mean, that is not uncommon. I think it's partly due to, the work that they're doing, right? And they're just doing the work. And again, proactive, right? There's very few that actually operate in a proactive fashion. So they're
Hmm.
more in a reactive fashion. And so they just, don't, a lot of them just don't have that mindset. So it's pretty common what you've experienced. And that's one of the reasons why we've integrated it into, what we do.
Yeah. Now, how big is your team?
So we have 7 wealth advisors on the team. Then we have a support team underneath that. And then we have on the tax side, we have 7 or 8 on the tax side. Overall, our tax business does do counting, bookkeeping, payroll. So, and plus obviously tax work. And then what we do is we have a couple partners we work with that we consider on our team actually, but we have a team that does CPA team that does nothing but tax mitigation strategies for higher income, higher net worth folks. So we work with them, we partner with them and work on client situations, bring them into client meetings, work with the advisors. So we're able to leverage that as well.
Yeah. I remember something my dad told me. He said, "You'll never gain much wealth, great wealth until you work for yourself." And and I think a lot of that was because of the tax strategies that are available to business owners as opposed to employees.
Yeah, I mean, I think that certainly is part of it. And in a lot of cases, right, you can control, what you make, how much, and hopefully things work out, right, from that perspective. I always liked knowing that, I wasn't going to go in and lose a job. You know, I knew I'm not going to fire myself probably, although maybe sometimes I should. But yeah, you also have those advantages as a business owner from a tax perspective, that you can use to your advantage as well.
Did you start off as, did you start off as yourself and then start adding, or did you buy a firm? Did you rise up in a firm? How'd it go?
No, I started off as myself, and then as I continued to grow, then I started some acquisitions. So we've had several acquisitions over the years. I've actually sold some pieces of the business. So, I've done that along the way. I mean, I did that for, just because as we grew, it was harder and harder to kind of know everything, to kind of be a general practitioner just because of the changes and the complexities. And so, we've continued to narrow our focus on who we work with. And then it's developed into, a RIA, registered investment advisory independent firm, developed into that, and then adding the tax piece, and developing into being much more comprehensive for the clients.
Yeah. What were some, so let's talk about your first hire. Did you hire somebody like you or somebody not like you?
No, I hired somebody that was very detail oriented, that could relieve me of the stuff that was not productive.
Yeah.
So I think early on, I identified that, there's stuff that as an advisor, I should not be doing.
Mm-hmm.
And so they're totally opposite. And I have still on the team today people that have opposites of me or the team itself. And it's intentional because I'm not a paperwork. I've always told clients that I'll never delegate advice. I'll always delegate the paperwork. So I do that. Secondly, is a leverage of time. So I always want to leverage my time. And so I identified that early on, probably a lot to do with my father and what he taught me along the way as well in leveraging time. But fortunately, I felt that and saw it early on, like, and I really need to have this person, and I was willing to spend the money on it.
Yeah. Yeah. I had, this is actually my first hire in my own business. I worked in industry before, but somebody named Elena, and she works for me again. And she came up to me one day and started talking. And I listened and I listened and I listened. When she was done talking, I said, "Let me see if I have this right. There was a problem. You identified the problem, you fixed the problem, and you're just here kind of giving me a summary. You don't need anything from me." She's like, "Right." I was like, "Bless you." You know,
Right.
and that's, but she's that detail person. She's that detail person who takes care of all the details so I can focus on other things. How about your second hire? So once you had that, what was your
Mm.
next hire?
Yeah, you're really taking me back. I've been doing this 32 years, so it's probably hard to remember, but it definitely wasn't an advisor. It was another one that in the support side of it. And I think that one was to shadow me. So it was, you're going to run alongside me and, be in client appointments, help with client follow up, things like that, so that I can move on to the next one.
Yeah.
So I'm just not real good if I have a busy week and then I've got a stack of like stuff to get through. That's just not me. So, and I was honest with, probably more brutally honest with myself, going, okay, that's not me. Because if that stack of stuff, and I'm not saying I don't have stuff to always to do, but, particularly when it comes to clients, and if I have that stack of stuff to do and it's a Friday afternoon and now it rolls over to the next week and, it just continues. So, I, wanted early on identified that, I don't want to have that at the end of the week. I want to be the doctor that comes in, diagnose, works with the patient, right? This is what we need to do. And then I'm moving on.
Yeah.
And so I did that and I've been doing that for a lot of years.
Wow.
And I still have someone. I don't, I have a limited client base now with the other responsibilities in the firm, but I'm hardly ever on an engagement with a client that doesn't have somebody with me.
It's smart. Smart.
And it's a teaching mechanism. So, I've got a couple people that worked for me and now they own their own firms. It just didn't work out with us. They grew, they branched off and now they literally are running their own firms, but they started in that position, running alongside and learning it. The other thing is it's gotten so much more complex in a lot of ways that if somebody wants to, have an interest in being in the career and advisory role at some capacity, or even in planning, things of that nature, it takes a lot to just get someone up to speed. And so we put in a residency program that say, you got to do your residency program. We can't have you have responsibilities with clients just right out of the gate. You got to learn it. And you think about the medical profession, that's what they do, right? They
Right.
by the time they're able to do surgeries on their own, they have seen so much and have been running alongside experienced surgeons and that it's natural to them. They know what to do. And so that's how we think about it in our firm.
Yeah. I'm sure it was sad when you lost those people, but I would also imagine there's a great sense of pride to see that you were able to launch multiple businesses, launch people into their own careers, successful careers, having worked with you.
Yeah, no, it definitely is. I mean, yeah, it is sad to see him go, but you know what? You're not going to be a fit for everybody,
Yeah.
and I'm not taking it personal, it's just not a fit for everybody. So I'm glad that there was a foundation there. They saw the need, there wasn't a fit long term, and they were able to kind of branch off and, grow within what they wanted to grow and achieve, work on achieving what they want to achieve.
Yeah. If there's been one leadership lesson that you've learned in this journey, what would you say it's been?
Yeah, I mean, I think that is, to be thinking about the development of people. So, you can only go so far on your own or even with a small team. You just, there's only so much you can do and you have to develop people. And so, I try to, and I've gotten better over the years, try to think about, is this something I could be doing that I could be showing someone else?
Yeah.
And so continuing to develop people, I think, is a huge leadership lesson. And hopefully whatever business someone's in, hopefully they can get to a point where they can do that. And and that's been a huge lift. The other one, and you said one, but I think the right hire, putting the right people on the bus. And several years ago, we put a process in place on when we bring people in, and that was made just a really big difference because we're identifying them on the front end and working them through the process. So once they start, we really feel like they're the right person on the bus.
That's cool. Do you guys use the EOS system?
We don't use the EOS system, no. But I mean, I know a lot about it. I've read the book, but yeah, at this point, we
I
don't
was
use
just when I hear people talking about the right seat on the bus and
it.
on the right
Yeah,
bus, I immediately go to EOS.
yeah, yeah. I mean, good to great. You've got these, kind of books, right, and so
Yeah.
forth that are out there that talk about saying it a little bit different, but getting the right people in the seats, right, however you want to say it, but making sure that you've got the right people.
Yeah. So when was the inflection point when you decided to bring taxes in-house? Because that fascinates me because like I said, a lot of firms will think about taxes, but they're not as forward as you are. And you said that you even do some of the bookkeeping services and so, all the
Yeah.
way down to bookkeeping. That to me that seems weird, and I don't mean that in a bad way, but weird in a unusual. And so I'm curious, what made you decide to do that, and how far into the journey was that?
So, well, the journey was that, again, we would collaborate or try to collaborate with CPAs that, clients work with. And, it was several years ago that we were working on a client case and they were going to have some tax issues down the road because of required minimum distributions. These are dollars that have to come out of IRAs, forced out by the IRS, by Uncle Sam, and their projections were having large distributions down the road, and they were in a lower tax bracket today. And so I did the projections, and I said, now we need to go see your CPA, and they took it to the CPA, who, by the way, I referred them to do their taxes. CPA said that's not a good idea. And so I talked to him and I said, let me just understand this. Do you know how much they have in IRA money? No, I don't know. I said, so do you realize what their required distribution is going to be projected? No, I don't have a clue. And once I shared it with them, they were like, oh my gosh, I see. That was a defining moment going, okay, we need to start our own. So, a lot of colleagues over the years, it's like, how do you start it? Where do you start it? And I said, I'm just going to start a tax business. I'm going to find somebody that has always wanted to be in business, that's in the tax business, and we're going to put this together. And so we started that 5 years ago. We brought it together. And then in the meantime, we've acquired two businesses. I really wanted to have that a sustainable business. So it's a separate entity, sustainable business, all within, kind of our umbrella. A lot of firms that do what I do, it's a loss leader for them. So they
Mm,
bring it on and they do a loss leader. And I say, I want a sustainable business, which part of that would be having this ongoing work. So it's not just work during tax time, it's working with businesses ongoing, right?
yep.
Bookkeeping, financials. So our business now has, some, ongoing business work. We certainly do a lot of tax work. And so I wanted a sustainable business to work into the model. When I talk to other firms, I've done a lot of podcasts and a couple of them were just launched. This comes up when in my industry. How did you do it? I mean, people are really, really interested in it. And I think it's where the puck's going, quite frankly. Because, people that we work with that get into retirement, for most of those people, healthcare will not be their biggest expense. It'll be tax, bar none, 3, 4 times more than healthcare. If they need healthcare, long-term care, things like that at the end of life, then it could catch up. Beyond that, a lot of people, it's going to be tax, period. And
That's
so
saying a lot. That's
it's saying a lot in tax projections with qualified assets, IRAs, right, that people are saving in the way they're saving, where you're seeing required minimum distributions now that are well into the six figures. That means money that has to come out, pay tax on it, even if you don't need it. So I think where the puck's going is people are going to run into that because, again, this is where we're saving. When I started in the business, a 401k was just getting rolling. Now, there's $40 trillion in these accounts that get to be taxed. So I think the puck's going where people are going to need advice on how am I going to do this. The other law that changed, there were two laws, Secure Act 2.0, changed the game for people in giving money to the next generation. Changed the game. And so that there's this big tax, we call it, big tax bomb, right? That's going to continue to grow. So we really had a belief that that's where the puck's going and we need to integrate this. A lot of advisors really can't talk about it if they work for a firm. They can't, even though if they have the capability. I know advisors that are CPAs, very skilled, and they work for a large firm. They can't talk about taxes just because the firm's got to protect the greater good,
right, right.
right?
So the
And so
secure
we don't hide behind it. We tell people we'll talk about taxes all day long. It's not, it's one piece of a big, big pie that we help people with, but it's an important piece.
so this Secure Act that you're talking about, basically it's trying to take a bigger chunk out of inheritances.
Well, yeah. So what it did is two things. One is it moved back required minimum distribution dates and
Hmm.
ages. So it moved those back. So that sounds good.
Right,
Like I don't have to start taking it now till, 73 or 75 compared to 70 and a half. But what used to happen is if I died with an IRA and I left it to my child or my beneficiary, they didn't have to take it all out. They could take it out as a pension for life. Every year they take a minimum out and then they die, they could pass it on to their kid and their kid. So it's generation, generation, generation. Secure Act said no more. 10 years. So what happens now is somebody dies with an IRA, they can leave it to their spouse. But if it goes on to the next generation, that next generation now has 10 years to take all the money out. 10.
wow,
Now that next generation, which we're dealing with right now, is we've got many cases where they inherited this money. They're still working.
right.
If they've got really good jobs, and now they got 10 years to figure out how to get this money out. And many times, if they're not careful, it's going to pump them to the top tax bracket. And so that got eliminated. They're doing this actually around the world. UK is going through this, right? I think when they set this up initially, they did not envision the amount of money to be in these plans.
Yep.
So they changed the game, period. So That happened in 2020 was the first Secure Act, and trillions of dollars in there that's yet to be taxed. So what happens a lot of times when people retire, yeah, their actual taxable income goes down. Their income, they still could have the income that sustains them, but taxable income can drop quite substantially. And then all of a sudden see it, and then all of a sudden it starts going up. And then it continues to go up. And their lifetime tax during retirement is much more than what they expected.
And what you would hope would be a gift to the next generation ends up becoming a bit of a liability.
Correct. Whereas a Roth IRA, tax free to the generation. They still now have to take it out 10 years, okay, at the end of the 10th year after death, but it's tax free.
Yep.
So there's this, it would be a shame, from a standpoint of somebody saving all their life, they take out the minimums, passes to their beneficiary, and then now their beneficiary's got to, pay 40% of it to tax or plus. That's a shame that came from hard work, because all of those monies came from people saving and putting in.
Yep.
We're not talking pensions, right? We're not talking inherited. We're talking about typically they inherited, they saved it. So going back to what your question was, why did we integrate that? That's one of the major reasons. And then other reasons came about where people are going, well, I'm working with you anyway. I really would like it if you could just help me overall, right? And
Yep.
so that's how the tax integrates.
Eric, this has been fascinating. We could go another hour easily, but we need to wrap.
Yeah.
Eric, how can people reach you?
Yeah, so the best way they can go is, they can go, or best way to reach is go to the website. It's hilltopwealthtax.com, hilltopwealthtax.com. And on that website, they can actually find I wrote a book. And so they can download a free copy of the book. It's called The Personal CFO Revolution. So, for chief financial officer, we really believe that, individuals should have their own CFO. Things have gotten a lot more complex, right? There's been three major tax overhauls: Secure Act 2.0, and the One Big Beautiful Bill in the last 5 years, plus a lot of other changes, a lot more investment choices. So we really help people as their chief financial officer on a personal basis making decisions.
No, I love that. Well, Eric, thanks for coming on Leaders and Legacies.
Thanks for having me. I enjoyed it.